Hey traders, John Howell here. So today I've got something really amazing for you. If history is repeating itself right now when it comes to the inflationary environments that we're in, if history is repeating itself and we're going back in time to see analogous or situations that are the same in the past, then I've got something pretty amazing for you. It's just an observation about what I'm seeing when it comes to the markets, and so especially the gold and silver markets. And I think you're going to really like this one. So let's get straight into it. Don't place a trade based on what you're seeing in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, so let me just a quick little update guys across the actual stock market itself. Sort of like a big picture analysis on the stock market, and then I'm going to get into some gold and silver sort of situations here. Okay, so let's actually start with the stock market. Firstly, fear and greed index. Let's have a look at this here. We are still at extreme greed right now, guys. So when we're looking at things like, especially like the Nasdaq, right? Like look at this Nasdaq here. It's important, traders. It's really important to understand that. Nothing just this is not just going to keep going up and up and up. Okay, so if you are thinking that, let's look at reality and see what the reality is. Even though you may not like the reality is what we're probably going to see a very sharp pullback out of this level here. So that's what we're seeing right now, especially this AI bubble we're in right now. So that's what we're seeing right now. Again, that's especially with the AI through there, and especially with a lot of these tech stocks. A lot of these tech stocks are just really moving the upside. So again, guys, we never know exactly when the top's going to be, but never try to get that last little drop out. Right? We want to make sure that we're getting in at the best time possible. So the first thing is like look at extreme greed. Right? We're still at this 82. Traders, the market is going to pull back. That's it. Period. Right? The bust is coming for this one. The bust is coming, but then there's a market that I believe is going to go through an extraordinary boom, and I'm going to talk about it. Right? The boom and there's a bust coming, but then there's a boom coming as well too. The bust is probably the AI bust, and look where we are right now. Right, we are hovering around the market right now is at its extreme greed. It's been up here more than ever before. All right, look at this here. Pack in the past 12 months. Even here, right, this one here just poked its head back up above 82 and then got back above really quickly. Look how much we're actually holding through here. All right, check this out. This is pretty cool. So we actually just poked the head back above there and we got back down straight away. But we're actually staying up here right now. That's how much greed is in these marketplaces right now, guys, when it comes to, these markets here. So here's the thing, okay? Here's the thing. We will get there. There's going to be a point in time, right? Now it may not be the starting of the first day that comes back next week. Okay, obviously there's a public holiday, Juneteenth, or whatever that thing is, right? So there is going to come a point in time that we start to see this thing come back down to here, possibly, maybe even down to here. That's going to cause the pullback in the markets. Okay, so we are going to see that, and it's written all over the wall. Okay, it's written all over the wall of what we're probably going to see here. So if we have a look at, say, more like a trend line basis through here, if I draw a trend line from there to there, I would have to say like a pullback is probably going to see through here. So, and that's all I'm saying there, traders. Like it's just, you actually want to see this, right? Up, down, up, sideways, up. Guess what's coming next? Down, and then possibly see back and move back to the upside, because I do see, traders, okay, I do see, especially looking at, let's say, the S&P 500, right, the index. I actually do see the index. I do see the index. I'm just looking at this chart here now. I do see the S&P 500 making a new high by the end of the year. Okay, I actually do see it making a new high by the end of the year. I did a video about a month ago saying that. So, but again, we're probably likely to see some form of a pullback out of the markets here. And when we're looking at the average leg to the upside, look at this here. So if let's actually draw this here. So the average, that was that leg there to there. Okay. This one here was a lot, that one there was a lot smaller. That one there's probably the average, so that one there was the same. So that was the average leg up before we had a pullback. This one here, actually that's not even, we actually had a slightly up move, right? When we talk about like the vertical moves up, like this one here with no pullback, if I go back to analogous situations in the past where we've had pretty much a vertical pullback with no, see these ones are just they're stepping up here. So this one here would be the vertical one with no pullback. All right. We also had this one here as well too. Notice how that's actually pretty much the exact same. I'm not talking about the angle. I'm just talking about like the length of that move. Okay. So if I just draw it like that there. So what I'm doing is I'm just drawing it to see how high it actually went up before we actually found a peak. That's all I'm doing there. Okay. On the S&P 500 here. And then we do this one here. So if I go back in time, we also can see, okay, look at that there. That almost got, see what that was pretty much the exact same thing, right? Look at that there. So that's when the market, that was the start of the move. That was the end of the move. That was the start of the move. Look at that there. It was almost the exact same, right? Because that was the period of where we went vertical with no pullback. That's why I'm trying to look at the analogous situations here, okay? Of that through there. And then if I go down from there to there, this one here was actually a bit higher, wasn't it? This one here was actually a bit higher than that one there. That was sort of the overextended it through there, and that point through there. We can't see anything through there. Let's see if I go to this point from here to here, right? We can see how we're not quite there yet, are we? Right? We still can have a bit more upside coming out of this level when we're looking at the average length through here. So, but I wouldn't be trying to guess that, you know. I mean, I wouldn't be trying to say, okay, well now we're definitely going to be having a big move to the upside before we get that pullback. Okay, so we can see here the purpose of me drawing this is the purpose of me saying that is yes, we can get a bit more upside to, we can get a little bit more to the upside, but we just want to be obviously you can do what you want to do, but you just want to be careful of where we're at right now, especially when we're looking at things like with the VIX situation, guys. Okay, look at the VIX here. This is actually, just remember, guys, everything goes in cycles, right? What goes up comes down, what goes down comes up, right? We know that. So look where the VIX is still right now. Oh my goodness, the VIX is just way down here. So what's coming soon? What's coming soon? The VIX is going to do this. And why is the VIX going to do? What's going to cause the VIX to do that? Because the stock market is going to do something like that. Make sense? So that's what we're seeing through there when we're looking at the markets through here. And yeah, so that's basically what I wanted to share with you there. So let's go and have some fun. Okay, what do I mean by this? Well, if we have a look at the analogous situations of when it comes to inflationary times, okay. Now, let's have a look at this here. So let's go to the United States, the inflationary times, and let's go to the maximum chart here, right? And we have a look at the maximum chart there, okay? Now, the first thing we do see is what? We see every time that's an inflationary time, that was an inflationary time, and now we're in inflationary time right now, okay? So firstly, when it comes to the inflationary time, what is coming? What's coming? Firstly, as you can see, every time we get an inflationary spike, right, an inflationary problem time, we have a move down, and then we have another second spike. Move down, another second spike. We're having a move down. Guess what's coming next? Another secondary spike. Now, we're talking about decades. We're talking about over the course of a decade here. So that secondary spike is probably going to happen in 27, 28, right? That's sort of the big picture analysis there. Now, let's go have some fun here. So in the inflationary spiking times, what was the best thing that actually formed or it did really well in the markets? And if we go back to the 70s, what was that? Well, we have a look at, say, metals, right? Gold and silver. So if we go have a look at gold, okay, and we bring up this weekly chart here, and if I go back to the 70s, right? If I go back to the 70s, look what happened to gold here, right? So remember, the start of the 70s was what? The start of the 70s was indeed a move up from there to there, right? So I move up from there to there. And that was the first spike, right? So the first spike was the start of the 70s, right, into 70, 75, all right? And then we had what? A bit of a pullback through here. And then the second half of the 70s, 76 and onwards, right? Very, very, very similar to what we're seeing right now. That's why I'm saying 76, 77. Look what actually happened. 76, 77, and then we just had this massive, massive move to the upside with gold, right? Now, we're talking from the absolute low point of where gold made from there in that 70 is sort of 76 period back up to here. Okay. Now, why is this important? Because guess what, guys? Similar things happen again and again and again for the same certain reasons, right? And under the same circumstances, sort of similar things happen under the. All right. So what I'm trying to say here is that if we can get ready for what I believe is going to be one of the biggest moves we've ever seen, we can capitalize on that and do extraordinarily well, right? Extraordinarily well, especially coming into, on the other side of the election, 25, 26, like that sort of period, 27, 26, 27. Yeah. I'm thinking back here. So 1976, 77. I see sort of similar things happening here with gold moving forward. With that. So that's what I'm seeing there when it comes to the gold market. But look at this here. So if we have a look from the low point, so that's the absolute low point from there to the high point, look what happened. So gold went up what? Gold went up 700%. Now, when I get to silver, you'll do a bit of a nugget in your pants when you see what happened with silver. So let's just say, for example, we're going to experience something similar, a similar effect in this year, okay? Now, again, no guarantees of this, right? But again, if every single time, if last time we had an inflationary problem, which was 70s, and right now it's very, very, very similar when it comes to the inflationary problems, certain things are going to expecting to come. The second spike is probably going to come. There's going to be a cause-effect relationship, which simply means there's going to be something that's going to cause that secondary spike, printing money, so on and so forth, right? So we can start to put the pieces together. So if we have a look where we are right now, right, and we just say this is that low period from there. Okay, let's say the market does pull back from here. Gold does get a bit of a pullback and so on and so forth. But we get that pullback, right? And just say that's that low period from there. And then guess what? This is that low period that we saw before in the 1970s, okay? But remember, what did we see here? We saw what? We saw a 700, almost 800% move to the upside. So what I'm going to do is I'm going to squeeze my charts up here, and I'm going to see, so this low point for here, so 5,000, and this, I know this sounds crazy, guys. I know this sounds absolutely just crazy, but again, this is what's probably, so I'm looking for, still not there, right? Still not there. And I know that, again, guys, so I'm looking for around about that 700 to 800% move, right? From now through to say 2030. 700%, 700%, there's 750 right there. Right, so we're looking at possibly, and that's actually this here once again, from that low period. So we're possibly looking at 15,000 in gold, right? That's an 800 something percent move. So 15,000 on gold through there. Now, again, guys, I know that sounds pretty crazy, right? But if we start to put the pieces together of why that's going to happen, especially when we come into the later stages of this decade and the early stages of the next decade, when we're going to start to talk about the debt defaults and stuff like that that's going to happen, you can imagine what's going to happen with gold, right? So again, I'm not saying this is definitely going to happen, but if we go through history, right, history just keeps repeating itself. We know that, right? Like it's just, we go back, if we go back and we see certain things happen over and over and over again, and the same cause effect relationships cause that certain thing to happen, and then the effect of that is certain things happening within the markets, right? And we can be getting ready for that as well too. Now again, guys, what I'm saying here is this is probably going to get, this may have already started now, but I believe it's really going to get heated up through, say, 25, 26. Now, when I say heated up, is that we may be in that move right now, right? We may be getting ready for another big move to the upside right now in gold. So I'm not saying, oh, well, I'm going to go buy it in 2020. I'm going to buy it in 2027 and rather move up, because we may have already formed the bottom and we may be slowly crawling up from here, right? So that's gold for you. Again, guys, this is just an observation, right? If this happened in 70s, and right now the inflationary problem is in the 70s, then the same things could happen and the way we go. Okay, so let's go and have a look at the good old silver. Now let's see what actually happened with silver here. Let's take everything off the screen here. Draw the, oh, I just deleted. All right, so let's go look at silver. Now this is gonna make you do a bit of a bit of something, okay? And again, guys, please don't say this will never happen, because again, go back Ray Dalio stuff. You'll see like you've heard the analogy, right? History doesn't repeat itself, but it rhymes. The further we can look in the past, the further we can look forward. Same things happen again and again for the same cause effect relationships, etc., right? So that's what I'm doing now. That's all I'm doing right here. Just looking for the same sort of situation. Now, this is what happened with silver. So silver, there you go. Silver did what? From the low point of silver to the high point, what did silver do? Silver did 1,100% move in the space of, what was that? From 76. Interesting, right? So interesting. See how it's this from this sort of 76 to 79, 80s. That's when we started to get the massive spike in gold and silver, right? Interesting. I wonder if certain things are going to happen now, right? Because we got the initiatory spike. Like you can see back here, look at this here. So the start of the 70s got what? We got the start of the 70s, we got the first move up. Start of the 70s, we've actually got the first move up with gold and silver. Sorry, start of 70s, we got gold move up in gold and silver. The start of the 20s, which is very similar to what happened in the 70s, because remember, look what happened in the 70s. Right? What happened in the 70s? 70s, we got what? We got a inflationary move. Then we had a bit of a recession period. Okay, that's the start of, this is the 70s here. And then guess what? Then we had another move to the upside. Right, another move to the upside. So we can see that. If we can see this sort of thing happening, and this is obviously, what's this here? 75, 76. What's happening here? Move down, 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 down into 2026. Right, the inflationary, and then another move up into what? 2030 or 2029. Okay, so we see that through there. So we go back to this point through here. So first move up. And now we can see what, and then we had this extraordinary move to the upside. So, is silver about to do the exact same thing again? But again, it's probably going to really get heated up in, say, 2026 and onwards, right? Is it about to do that again? Now, if it does do that, remember this is 1,000% move from the highs. Let's go do the exact same thing where we are right now, right? Where we are right now. But 1,000% move from where we are here, okay? So if we go from there to there, so there to there is just what? Is just a 179% move. Let's actually squeeze this up even more, and let's actually see if we had this from the low period, now, and we looked for, we're still not there, right? Look at this here. So that low period from there to there. And again, I'm looking for that 1,000% mark, that 1,100% mark. And that is right there. 200 Bam. Now, let's actually look at this here, guys. If you did buy way out of the money options where you're risking 100%, or even if you did buy options with that and you had a lot of time with that, could you imagine the reward? We're talking about 20, 30, 40, 50,000% increases in your options over the course of a couple of year period. We're talking life-changing results here, guys. And again, I know this sounds pretty crazy, but it may even be much bigger than it was back in the 70s because of technology and computers and so on and so forth, right? So that's what I really wanted to share with you today, is that same things are happening right now. That, you know, the further we can look back in the past, the further we can look forward. If you understand Ray Dalio stuff, we can see that, you know, the same things happen again and again and again for the same cause, and then the affect relationships. What actually causes the boom in the first place? The same thing happened in the 70s is the same thing that's happening right now in the 20s, right? 2020s. The 2020s, the exact same thing as the 70s. The exact same thing that happened in the 70s that caused this first move down in the middle of the 70s, right here, right? That moved down in the 70s, and then there was something that actually caused the secondary spike. There's something that's, and the exact same thing that caused the movement on the downside and the inflation is the exact same thing that's happening right now, and the exact same thing that's going to happen over the next couple of years that's going to cause the secondary spike, which is going to be much higher than this one here. Guess what? We can now see what's probably we can now have a really good high probability of a bit of a crystal ball of what's coming moving forward. Here is the big problem for you guys. It's going to take years for this to unfold. Not just, oh, let's go buy gold and silver today, and you wake up tomorrow, oh, damn, it's down 3%. Like, no, right? Remember, guys, this is the big picture analysis. This is about what's probably gold and silver probably going to be doing from now, and maybe not even now, right? We're probably going to have a bit more of a pullback, not much going on. But that next second reflation is probably going to be around that 2026 period. Because why? Because this was 1976. So look at 2026. Same, right? 2026. So 2026 and onwards, that's where we could possibly see some really big moves to the upside. So there we go, traders. Hope this helps you out. Traders, if you need some help with your trading, that first link in the description there, guys. I'm giving away a 30-day free access to my coaching program. So go test it out right now, and I'll see you real soon. Hey traders, I want to give you free access to my Mastering the Markets trading course. If you go to johnsfreegift.com, here's what you're going to learn in there. You're going to learn the #1 chart reading and trading technique that's been working since the 1950s. You're going to learn the trading boundaries technique that shows you the best and worst time to place a trade. You're going to learn also about price and time phases so you can understand what's going on right now and also what's to come as well too. My #1 powerful short-term income trading system that gets a 90% success rate, the most powerful trading techniques on the planet, the biggest trading mistakes that's stopping you from making an income. You're going to learn all about the super trader formula, plus the 3 secrets to making a full-time income from trading. So this is what I want you to do right now. Go to johnsfreegift.com. Go there right now. Get free access to this trading course. Go get the help. It's 100% free. Go there right now. Go to johnsfreegift.com right now.